Did you know that the average Canadian family paid about 45% of its income in taxes? Tax is going to be the single biggest expense of your life. And the best thing you can do to get ahead is to understand basic tax rules and use them to legally work in your favor. In this video, I cover the important tax changes in Canada for 2024, empowering you with the knowledge to plan for the impact of tax on your finances and make the most of your hard-earned money. So let's start off with the changes that will cost you more money. CPP contribution increase. The CPP is a mandatory federal retirement plan that working Canadians pay into. Although the CPP is not a tax, it is a compulsory deduction out of your paycheck, similar to taxes. So you don't get a choice in paying this. Your CPP amount is increasing for 2024, which means more money deducted out of your paycheck. If you earn more than $73,200, you will pay an additional $300 in CPP for 2024. I've covered the impact of the 2024 CPP change in this video. Next up is carbon tax. You pay carbon tax on fuels such as gas for your car, natural gas to cook. From April 1st, 2024, the government has increased carbon tax rates from $65 to $80 per ton. This will increase the carbon tax you pay on gas for your car from 14.3 to 17.6 cents per liter. At this higher rate, you will pay $11 in carbon tax every time you fuel a 60-liter car tank. These costs do accumulate over time. Taxpayers in every province and territory except Quebec have to pay this increased carbon tax rate. The next item that will cost you more money is employment insurance premiums. Employment insurance premiums provide temporary income support when you're unemployed. Similar to tax, employment insurance premiums are compulsory deductions out of your paycheck. These premiums are increasing in 2024, which means more money deducted out of your paycheck. However, this amount is quite small. This change will result in an increase of $47 to your max EI contribution over the full year. In the grand scheme of things, this won't materially impact you, as you'll only see a small $1.80 increase in your EI premium contributions in each bi-weekly paycheck. And finally, we cover a recent measure announced by the government to take more of your money with the increase to capital gains tax. Capital gains are the profits that you make from selling an asset, such as shares or a vacation home. Starting June 25th, 2024, the inclusion rate will increase from 50 to 67% on gains in excess of $250K. You could face the impact of this change when you have a large one-time event, such as tax realized at the time of death, selling your second property or gifting it to your children, or a large sell-off of shares in your non-tax sheltered accounts. For example, if you had profits of $500K in a single tax year, perhaps from selling a property in Ontario, you would pay an extra $22K in tax. According to the Globe and Mail, if you have time on your side, the simplest strategy could be to sell your assets over the course of many years so that your profits remain under $250K. Next, we cover changes that will put more money in your pocket, starting with higher tax brackets. For 2024, income tax brackets have increased by 4.7%, and this will impact you positively. The tax rates remain the same. What this table shows is that the ranges have increased. For example, the tax rate of 15% now applies to taxable income of up to $56K versus $53K. Now, more of your income will be taxed at the lower 15%, resulting in savings for you. Provincial income tax brackets have undergone similar changes. Across the board, more of your income will fall into the lower tax rates in 2024, so you can expect to see a reduction to your tax bill. To learn more about how your income is taxed in Canada, check out this video. Next up is the increase to the basic personal amount. The basic personal amount is the first little chunk of income that is tax-free. In 2024, the federal basic personal amount has increased to $15,705, a $705 increase from 2023, resulting in $105 of tax savings for you. Next up is the TFSA contribution limit increase. The tax-free savings account is an investment account that protects your profits from taxes. It is an important tool to use for your short and long-term financial goals. In 2024, the TFSA yearly contribution limit has increased by $500 to $7,000. So on January 1st, 2024, you have $7,000 in new TFSA room. This will give you more space to grow your investments tax-free. Next up is the RRSP contribution limit increase. An RRSP deduction allows you to reduce your taxes and save for retirement. Each year you gain new RRSP contribution room as 18% of your earned income from the previous year, capped at a max amount. The positive news is that this max cap has increased to $31,560 for 2024. That's an increase of $780 from 2023's cap, allowing for more of your income to be sheltered from tax. This benefits those who earn more than $171K as they get limited by this max cap. If you earn more than $171K, you will enjoy an extra $780 in RRSP contribution room for 2024. If you have a company pension plan, your RRSP contribution limit is reduced, so it's not exactly 18%. You will find your precise available RRSP contribution room for 2024 in your notice of assessment for the tax year 2023. Make sure to use that number. Next up is the first home savings account that you may be unaware of. The FHSA is a hugely beneficial account to save money to buy your first home and at the same time reduce your tax bill. The FHSA combines the best features of both the RRSP and the TFSA. Identical to the RRSP, contributions made to an FHSA reduces your taxable income. Similar to a TFSA, you can withdraw money tax-free to use towards the down payment of your first home. The annual FHSA contribution limit is $8,000 for 2024. To accumulate room, you do have to open an FHSA account. Otherwise, you don't accumulate it. It has a max lifetime contribution limit of $40K. If you are looking to buy your first home, then please don't miss this out. And finally, mental health services get cheaper. You won't have to pay GST HST sales tax on psychotherapy and counseling therapy for 2024. The government made this change to make mental health services more affordable. In Ontario, if you had a $200 session, you would have paid 13% sales tax, costing you $26. Now you don't have to pay this anymore. I hope you found this helpful. Let me know if you have any questions in the comments down below. Thank you for watching.